Okay, hi everybody. Hi out there in the Elrond world. As usual, just make sure that everyone can hear me fine. Someone wanted just to throw in a message there um, and let me know we're good. Um, and we'll get going. Okay, so here we are again. It's been a while now since the last Elrond Talks, and I'm really happy to be here again. As usual, just a few housekeeping items. I just want to make sure that everyone understands that this is a community platform, Elrond Talks, and if there's anyone out there who wants to do an Elrond Talks takeover or wants to do their own Elrond Talks, please just get in touch with me, Eddie, or anyone in the community, and we'd love to have you on. So today for episode 7, we have Wesley Kress. He has been out there the past little while creating some awesome fire content. It's been absolutely amazing having him out there, adding tons of value. Some of you have seen his blog post, his most recent video, and we've been going back and forth for the past little while to have him on here. So we've decided to do that today. So this is we're really looking forward to this, and we're happy to have him. So today we're going to be talking about bridging the gap between traditional finance and the Elrond DeFi advantage. So without further ado, I'm going to introduce Wesley, and he's going to tell you a little bit about himself, how he found Elrond, and so on.
Thanks, Kevin. Appreciate the introduction and appreciate all that you know these talks. It's always great to see other community members and sort of the value contribution that's happening. I know that's sort of the ethos behind what blockchain and crypto provides, is sort of this community aspect of value delivery. So happy to be on board, and thank you for inviting me on. Just a little bit about my background. I have a dual concentration in accounting and marketing and undergraduate, and then I have a master's in business administration or an MBA in accounting and finance. I also did a 4-year track where we essentially managed over $7.2 million, did portfolio management, fixed income and equity analysis. Some old equity analyst reports are still online, and I've been an independent financial analyst for an extensive amount of time. I've been a part of financial markets for over 17 plus years, and both on the investment side and also on the trading side. And so happy to discuss a little bit how I found Elrond. I have been in the traditional aspect of the legacy system, in part because when I was teaching, I taught commercial banking and financial market institutions. So essentially, I have quite a grasp on how the financial system works, including central banking, commercial banking, investment banking, and unfortunately, the deeper you go down the road, the more sort of difficult in terms of how you know the system is unsustainable, and maybe how there's quite a bit of conflict of interest, as well as maybe corruption and centralized forces that are at play. And so it's very, very difficult for me to sort of commit my expertise and time and energy, maybe in the magnitude that I would have liked. And so I decided to become an independent financial analyst just because of conflict of interest. As a financial fiduciary, which most financial professionals are supposed to provide, you're supposed to have the best interest of the client. That's sort of the definition. Unfortunately, you can't sort of employ those aspects of how the system is set up. And so my identical twin brother, who's a software engineer, he's been in the crypto space since 2013, and always interested. And unfortunately, I was a little bit concerned about the space just in regards to how it could possibly disrupt the legacy system with regards to the level of control that the system currently has is significant. And so the ability to disrupt it is very difficult. But the deeper I got into understanding blockchain and crypto technology, and I recognize that it's going to be one of two scenarios. Essentially, we're going to see that it gets adopt it quite fast, or we're going to see that it's inevitable, essentially. And the reason that is just because it's sort of unstoppable, and that's why you've seen difficulties around Bitcoin since the early inception of it up until now. You've had regulators or different countries try to ban it and so forth, but unfortunately, like you can't necessarily enforce that. And so you have regulation and then you have enforcement. So the enforcement side, you would have to basically shut down the internet, and so that's the problem. So I have spent thousands of hours, or over 1,000 hours now, researching the entire crypto and blockchain space. Because of my financial analyst background, I have a deep desire to understand the entire space, because you can only understand what is out there unless, in terms of relativity, right? So you're looking at different blockchains and crypto projects out there. You have to have a decent grasp of the whole picture before you can sort of choose one. And so I was definitely open-minded in the space, and looked at all the different crypto and blockchain, read all the different white papers, and unfortunately, because of the complexity of the space, I just felt it was maybe not investable on the protocol level layer. And so I then stumbled across Elrond, and I was blown away. I've spent a tremendous amount of time reading their white papers, reading their economic paper, reading all the sources, all their blogs, all their YouTube videos back till 2018 with Benjamin and the team, and I was absolutely blown away, because a lot of the ethos that the blockchain space has, they also have those ethos in terms of community-driven value distribution. You can see that with how they designed the next token in terms of 100% community distributed. All of those aspects are necessary for the transition from the existing legacy system into the blockchain space. And the reason that is because the value proposition that blockchain and distributed ledger technology provides is sort of this ability to remove the middleman that's sort of siphoning off of all the value, and allow the everyday individual, who's normally a depositor at like banking financial institution, to actually receive value back. Because like most people know that if they house their money in a bank, right now, what essentially they're doing is they're handing it over to an entity that entity then lends out and makes money off of, and they share that money with their shareholders, and they share it with top management, and depositors see nothing. And so essentially, we're getting the raw end of the stick, and it has been continual since the late 80s, the 1980s, where we've had this declining level of interest rates. But that's no mistake whatsoever. Those declining level of interest rates is sort of the problem with the system and how it's set up. So if you go back into, why the Federal Reserve exists, back in 1907, you had what we consider a panic, a bank panic that occurred. And so you had runs on banks and so forth. There was no sort of central entity to act as sort of backstop. And so the Federal Reserve was sort of founded in 1913, and they were justified as essentially the last resort for lending, and the ability to create 12 regional, what you consider FOMC, Federal Open Market Committee. And they did this in a way to sort of control the money supply. And it definitely is, let's just say, not advantageous for the everyday person and the everyday individual. And they slowly did it. So we kind of square in just a little bit on what money is, and maybe why, so people can get sort of an understanding of this.
Yeah, I'm going to stop you just for just one sec though.
Go for it.
We just seem to have an audio problem with the Bluetooth. It seems to be a bit staticky. Do you maybe want to try? Do you want to try your other headphones?
Yep.
I don't know about the keyboard clicks, because I'm not clicking on a keyboard or a mouse, so I'm not sure if that's still there. Live sound is not good. Yeah. So that one's a lot worse than your. Maybe now. Yeah, that one's a lot worse.
Oh yeah.
Might have to just go back to your Bluetooth, I think. I think the fan on his computer is causing feedback, and that's where you're getting that sound. Nope. Apologies, guys. We tested earlier and the fan wasn't on and everything was fine, so I think the fan kind of caused an issue here. Um, yeah, we have that feedback again. But we'll see if he gets it fixed here real quick.
Can you hear me now, Kevin?
Yeah, it's better. It's better than the feedback from the fan. So can you guys just kind of give us an idea? Is it still? Can you still hear him well enough? Anybody out there? I just want to make sure. We might have to just roll ahead with the current setup.
Can you hear me now? How's the audio coming from?
Yeah, it's okay. It's just it's a bit broken a bit.
Okay.
Yeah.
Let me try one more.
Okay, we're gonna try one more thing, and maybe just mute yourself while you're doing that, and I'll just talk for a bit. Okay, so yeah, basically, what we're talking about here today is the decentralized advantage and traditional finance, and like what we've seen, as Wes has pointed out, the declining interest rates and all that sort of stuff has negatively impacted the legacy world. I still call it the traditional world, but I guess it is very quickly becoming the legacy world. And so today we're here with these great advantages of DeFi, decentralized finance, and taking away things like the middleman and that sort of stuff, and putting finance back in the hands of the people. And kind of like what Wes said was, the internet would have to be shut down to get rid of decentralized finance. And I mean, there has been proposals out there in the U.S. recently about restricting internet access, and there's that sort of stuff. But at the end of the day, each individual node operator, each individual out there is in control of the network, and for them to shut that down would be fairly tough. And I think over time we're just going to see more and more people onboarding in from traditional finance. So do you want to try again now?
Yeah. Can you hear me now?
Yeah, I can. Yeah, but you still have that feedback. So maybe we just go to.
Okay.
I'm just going to check one more thing here.
One more.
Okay. If you just go back to the Bluetooth, I think. No.
Kevin, is this better?
That one is better, actually. I think we got it now. Much better. Okay, yeah. I think we're good now. To keep going, you want to just try again? Talk.
Yeah.
Yeah.
Let's go for it.
Okay, that's perfect. Okay. Okay. Sorry, guys, for all the issues. It's live streaming.
How bad did the initial audio come across?
Oh, it wasn't too bad. It wasn't too bad. It was just it was a bit it was just a bit muffled and stuff. So it's okay. Yeah, apologies for the sound check. We practiced earlier and everything was fine, but his pesky fan came on and then it just created a bunch of problems. So apologies everyone for that. Anyways, we'll continue on where we left off. And before we get going, back into it, what we do on every Elrond Talks is have you say something to prove you're not an android, something about yourself, to just let us know more about you and not just the financial advisor.
Yeah, no, absolutely. A little bit, just the fact that I actually have an identical twin brother. Most people actually probably interact with him on Twitter, and then my hobbies is powerlifting and weightlifting, and a unique element. I actually ride a unicycle, a 5-foot unicycle. As well.
Cool. So yeah, do you even DeFi? I guess, right?
Yeah.
Yeah, that's funny. Okay, so now that we're back, I want to pick up where we left off about shutting down the internet and how you were talking about declining interest rates and how DeFi puts interest rates back into the hands of the people and cuts out that middleman and basically creates a bank for everybody. So if you want to expand on that a bit more, that'd be great.
Absolutely. And decentralized finance is probably one of the most important elements with value proposition that the blockchain infrastructure that Elrond sort of has built and other blockchains allow for. And it's because of the fact that essentially instead of requiring high amounts of what we would consider in business as operational leverage, it becomes like you have very low operational leverage in a traditional system, meaning you need tremendous amount of employees, you need tremendous amount of overhead, and then how the system is set up is essentially the banking service really is serving the shareholders of these financial institutions, and by law they have to. And so all the value, say the money that you provide in your bank, it goes to allow the commercial banks and so forth to lend out. But instead of you receiving, say, interest that you would in decentralized finance and yield, it actually ends up going towards shareholders or top management. And so you never see any of it. And so decentralized finance is essentially the financial world for the people, where you have this sort of ability to change the model as to how that value delivery occurs and is received. And so the technology is sort of, instead of it being sort of the middleman with all of this sort of overhead and things, the technology itself allows that to be in place. So you have tremendous levels of operational leverage. And so all that value distribution then can be even higher for both ends of the spectrum, right? So it creates this peer-to-peer model where people can then participate in the financial world. And that's very, very different. And I think a lot of people maybe aren't familiar with investing or financial literacy because our world is set up to where we, our elementary and high school educations don't really, educate us around financial literacy and banking or anything, how it works. And so in order to really understand the power of decentralized finance is to really understand the existing legacy system and how we participate day to day, and how maybe that value proposition is more ideal when it comes to crypto and blockchain technology and the ability to leverage Elrond's infrastructure. And so, going back to this declining level of interest rates, the reason this is occurring is when the Federal Reserve was sort of enacted, we used to use money as a representation or value exchange, and the oldest form of that is gold. The challenges that occurred with gold is sort of its ability to be transportable or portability element. So you couldn't necessarily easily transfer from one individual. You had these bullion or large blocks of gold, and so it sort of made it problematic. And so that's when they brought in the fiat system. But initially it was fiat gold back, and then in 1930, I believe it was 1933, that we went off of this standard into where you basically put into legislation where you could only hold a small portion of gold. You couldn't hoard it. And then in 1971, we went completely off that standard. And so essentially now all fiat money is backed by liabilities, meaning those liabilities are bonds that are issued by the government itself. And so you can see where the difference of money is, right? One is backed by a liability and another one is not backed by a liability. And so you would want real money to be backed by something of value, and something that can't just be continually backed by more and more liabilities, and thus increase the money supply to where our ability to use it as purchasing power declines. And you can see this, and some people maybe if you look at data right now within the financial markets, we have equities at all-time highs, right? We have bond markets at all-time highs. We have a housing market at all-time highs, but it's all relative to the money supply, right? And so it actually, relatively speaking, it is not at all-time highs. So if you were to take a chart and take a relativity of, let's say, gold in particular, or not gold in particular, let's just say take the dollar relative to the Federal Reserve banking sheet in terms of equities versus the Federal Reserve, we're really flat.
Well, we're kind of talking about the GMU here, right? So like the global measurement unit, right? And how that's all basically just skewed because of inflation, and it doesn't actually match. So what's actually happening is that money that's being printed is actually just inflating things artificially. And yeah, if you look at the ratios, the ratios aren't really changing, and that's not good,
Correct.
right? And we're getting to a point where there's going to be a tipping point, and what's going to happen, right? And there's a lot of speculation. I mean, we don't need to sit here and speculate about what's going to happen with inflation, but yields are going down and everything else is going up, right? And like that's not good. And yeah, it's quite an interesting little dilemma that's starting to prop up with traditional finance and the money printing, and then we have DeFi over here, and all these options that can actually fix it. But you have those people, the shareholders in the banks that you speak of, and the management who are used to their big checks. They're used to all this stuff, and I mean, what do you think they're going to do, right? Like, and like it's a crazy situation when you really think about it. Yeah,
Absolutely.
yeah. So like it's wild, and I think when like you were talking about the banks, and what a lot of people don't realize is, when you deposit money into a bank, the bank then has the ability to loan out that exact same amount. So they're actually increasing their books 2x, right, or 1x.
Yeah, so actually it's more significant. So
Is it? Yeah.
unfortunately, historically, we have a system called fractional banking reserve.
Yeah.
And so like there used to be 10 to 13% of banks had to hold in reserves. Say if you deposited $100 into a bank account, $10 to $13 were essentially have to be held in reserve by the bank, that if you happen to come back, they would have your money. And so this is why the bank runs matter, right? So the bank runs because they don't actually have that money. COVID was a significant accelerator to this. So when COVID happened, essentially the Federal Reserve, they actually took the reserve ratios down to 0%. This is the first time in history.
Yeah,
so there is actually no reserve. There's no reserves whatsoever. So like they can take your deposits and infinitely lend them out, and there's no backstop. And so it's essentially increasing the supply, and when you increase the supply, but you have fixed goods like real estate or the essentials that everyday individuals need to live off of, right? Food, anything that's non-technological is more exposed to inflation than technology itself is deflationary, right? And so most of our monetary system is based off of inflation and not deflation, and it's because world used to interact in a world that predominantly was inflationary-based goods. So those are all non-technological goods. So housing, food, gas, all the things that sort of essential to live with, those are inflationary. But technology, you can see, is actually deflationary by nature, right? So like the device that we're actually speaking over, right? This device it would be super expensive if you bought everything. Historically, I know Radio Shack used to have an ad where you have a dual-sided ad, and all of those components are actually in our phone. And so technology continues to decrease or increase in value, but decrease with regards to price. And so it's sort of opposite in terms of polarity. And so we do have these like really strong deflationary forces that are occurring. And so that's why a lot of the inflation in terms of the money printing maybe isn't as exacerbated as it would be, because our world has become more digitized, more technological. The fact that we're having this interview, we're interacting by technology, is most of our e-commerce, all of that value is in the digital world, right? And so that's significant in terms of the differences between maybe the world that we're transitioning to since the late 90s, where the internet has come around, and now we have crypto and blockchain and the accelerant towards artificial intelligence and entire metaverse of a realm where we're all interacting. And so I think that's where Elrond sort of comes in terms of that value proposition, right? Is the ability to instantly send for a cent across the world. In the traditional legacy system, it would typically take 15 to 17 days to go through the system, and a lot of middlemen would take a cut, and it was very slow and cumbersome. And so it really is like maybe likened to the fact that when the iPhone first came out, or the telephone or the fax machine, people were like, oh, why would I use that? And maybe the technology wasn't good enough, and that's where maybe the first couple generations of blockchain and crypto technology is people are still trying to understand the value proposition. And that was Elrond was essentially recognizing this, and so that's why they wanted to create an infrastructure that was sort of the broadband moment, where it was super fast and super inexpensive. And then it opens up an entire world of new possibilities with regards to business models building on Elrond. And particularly, it really serves well in the decentralized finance, right? Because, I can take out a loan that's collateralized, and that's a big difference, right? I can take it out instantly, low cost, and that is very, very different than maybe the process that you would have to go in the traditional system, where you'd spend days, if not weeks, working with a personal banker, and that has a lot of costs and so forth. So the value proposition is that banks will have to still have to get on board, right? Because the value proposition is so significant that they will use the same things that were involved. They just happen to be late this time, I guess, because it's a grassroots movement. It started as this sort of rebellious.
Well, so did the internet. So did the internet, right? And like, if you actually go back to the internet boom, there's phone companies saying, there's articles about phone companies looking to ban internet because you could make calls over the internet. There's articles out there, millions of people leaving the internet because they don't quite understand it. And back in the internet days, the Nasdaq it doubled like 7 times before the crash, and it went through 6 or 7 times, but it was a lot. And if you actually look at it, what happened, and you look at the news and the history of it, it's almost identical to what's happening now. It came out, then there's a big boom, and then there's a bit of a crash because people didn't understand it, negative news cycles and such. Then you had, the powers that be, this is gonna, end this to us, and all these things were happening, consistently happening, the way it is today. And the internet, as we now know, is everywhere and everything. And yeah, like banks aren't going to have a choice. With the younger generation, which are I'm almost 40, there's people in their 50s, but a lot of 20-year-olds, lower 30-year-olds, and even kids are getting into crypto. And like you have Mark Cuban's son who's involved playing around, and there's all these young guys, and you think they're going to put their money into a bank that's going to give them negative interest rates? Personally, I'm dealing with negative interest rates in a bank. I don't keep much in there, but I do as a hedge type thing, because I still believe cash is king. But negative interest rates, like, come on. So I'm giving you my money, you're leveraging my money to loan out, and now you're charging me to hold my money. Like, it doesn't make any sense. And when I can just turn around, go to DeFi and put in even just a USDT stable pool and earn 8%. Like, it doesn't, it's mind blowing. And these guys, you have the news that's came out recently in the UK of banks starting to restrict. There's stuff in Canada, Binance and stuff going on all over the place. And people are just saying, well, it's my money. How dare you? And that narrative is going to get stronger and stronger, and one day it's going to end up in maybe it'll be Cuban's son who or someone it's going to affect someone in a high position, and then they're going to have to say, well, if we don't jump on board, we're going to miss the boat, right? So it's only a matter of time, as you say. And I think as long as there's people like us, and I think having you from this traditional finance world, 17 years, I think you were saying to me earlier, you were 14 when you started investing and playing around, and for you to now come over, and I think I saw you had a friend come in the other day. You've been posting about him as well, or her, I don't know, and you've had more people come in. So in your opinion, having all these traditional finance friends, I'm more of a nerd and I've always been a tech guy, so I don't really have any traditional finance people, but I'd say that is your crew. So what do you think the biggest hurdles for them is right now, and what's preventing some of the bigger people to come in, and what's the one kind of big thing you see that's causing issues to onboarding people quicker in the traditional finance investing world?
So great points. On the side that's sort of preventing things is that the way everything's governed within the traditional financial legacy system deals with all of the banking and large financial institutions having to play by the regulatory rules. And so they have what you call like prospectus and also like other guidelines. And so it's not that they don't want to participate, it's that they can't right now. And so this is part of where regulation is likely going to be positive, regardless if it's done negatively by the media. And maybe you have some negative short-term reaction because of the fear-generated headlines, and ultimately, but it's necessary to allow those large players to participate within the space because their sort of hands are tied because all of them are governed through entities called the FDIC, the Federal Reserve, and the OCC. And then on the investment banking side, they're a little bit more flexible. They're not considered like commercial banking. And regulation is really in place to protect the consumer and then secondarily protect the system. And so this is where this tug and pull is, because you can't really justify on a regulatory front that it is in the best interest to forego this technology, because ultimately the value proposition is so significant and substantial that that argument is not there. Of course, I think that there's going to be narratives that are pushed initially, but those narratives are going to fall away because the value proposition is so high. And then the reality is the existing system is also trying to protect the insane level of leverage that's in the system, right? So like I was talking about how 10 to 13% is usually the historical, but when you pull out that dollar, say you pull out your dollar from your bank, well, guess what? They now don't have 10x leverage to lend out. Now it's infinite, right? But this is the instability of the existing system. This is why we've continued to get more and more financial crisis over and over throughout like a concentrated amount of history, especially since 1971. 1971 was where Nixon basically took us off completely off the gold standard, and we essentially have had this endless ability to print more and more fiat money, which are tied to bonds or government securities. And that's how they issue them. And so it's basically all this money is tied to debt, right? And so the question is, do you want your money to be tied to debt, or do you want your money to be tied to, say, a digital infrastructure like Elrond, where you have all this stuff building on the platform and all the value proposition of decentralized finance and the myriad of other models that are going to be there? I mean, I certainly personally don't want to hold any degree of that, but I don't want to hold any sort of large amounts of fiat, simply because, look, I don't want anything tied to debt, right? And ultimately that debt
well, it's vulnerable.
is being devalued.
It's vulnerable.
It's vulnerable. Yeah. So what's happened is that the reason interest rates have come down is because that they've had three choices, right? Because you can't pay back the debt. You could default, which would then cause the U.S. government and the financial system has never defaulted, and so that would lose the trust of all countries that interact with the U.S. dollar and the Federal Reserve. They could essentially do austerity, but then politicians who require power and positions would then have to aggressively, like beyond your comprehension, tax because we just couldn't afford to pay back the exorbitant amount of debt. Or the third option, which is what all banks are doing around the world, and central banks, is essentially this endless level of money printing. And so that's what you consider a soft default. So the purchasing power, the best thing to hold during this time is debt tied to the US dollar, right? Because ultimately, if the purchasing power is decreasing, essentially that debt is becoming easier to pay back because the dollar is worth less. And so that's sort of the issue. And so the system is a significant problem. And I think it's obvious. People feel this through different mechanisms like wealth inequality. They get it from like the lack of equitable opportunity to participate in the financial system. So we go back to what we saw, the phenomena of GameStop was essentially, had these people on Reddit who had done phenomenal research. It was more to do with market mechanics than it was to do with like the fundamental valuation of GameStop.
Yeah, the short squeeze.
But they had
it's
this
alpha squeeze, right?
Short squeeze.
An alpha squeeze
Exactly.
or something, yeah.
Yeah, and most of those institutions, because they're all in bed together, essentially, and interconnected, they backstop it. And that's how they shut it down for a few days. They prevented bid orders, and they allowed some players to exit. And so blockchain distributed ledger technology is a trustless, permissionless system, right, where it's governed through technology. And so we don't have to worry about the powers that be essentially say, oh, no, you can't do that, or you have to play by our rules, which are only in their best interest and maybe not in the best interest of the majority people. And so, and it's all transparent. So it's open to see, and everyone can participate. And, that's ultimately how you create equitable opportunity. Of course, equitable outcomes are different depending on the decisions that we make. And I think that's partly to do with needing more financial literacy, more financial education. As the young generation get exposure to crypto, this is sort of their first, experience in investing and money and so forth. The timeless aspects of investing in financial independence and financial freedom, passive income, all of those principles still apply to crypto, right? It's just that the system itself is more equitable. It's trustless, it's permissionless, it's fast and expensive, and so it allows us, but we still have to think about the strategic elements of what we are doing. And so decentralized finance is still going to require us to make sure that we're risk managing appropriately, doing all of those elements, but it allows us to participate in the same way, like let's say a traditional order book, right? Like the NASDAQ or any of these exchanges, there's two participants between a bid and the ask. Most people who have bought on Robinhood or anything, they have two prices, right? Well, the bid and the ask are different. There's a spread between that. They usually pocket that spread.
It's like 5% right? Or something like that. Yeah, it's usually
exactly.
It's usually a 5% spread.
Yeah, and so that spread, and also the commission goes to the investment bank or the broker or whatever, and then the other spread, market makers get a portion of it, and so forth. And so with liquidity pools and things that are going to be launched on the Meyer exchange and so forth, we're the ones that get to provide that liquidity, almost like that middleman, right, as that market maker, and we get that spread. It's smaller because the efficiency of the infrastructure of the Elrond technology makes it so that all participants win, right?
You're basically answering any question I have before I even have the chance to say it. Because just on the Robinhood stuff, in general, what you're talking about is interesting because they actually shut their order books down, and one of the biggest problems with that is they have to have so much cash on hand in order to fill their orders because they don't actually have the liquidity to allow a book to just constantly move in its own way. And the DeFi advantage, let alone the Elrond advantage, is the fact, like you were just saying, is that there's liquidity pools that allow for the ratios and to keep, as a teeter-totter, to keep filling. And like Robinhood was the perfect example. This was happening. There was more going on with Robinhood with who owned it as well, but they did not have the physical cash to let that continue, and they would have been in trouble with the regulators. And so with DeFi, in general, the fact that we're able to put our own money in, create these vast liquidity pools, and with Elrond specifically, I think, bring this into an Elrond conversation, you kind of look at the fact that there's strategies going to be in place with Meyer that, with locked liquidity and the rewards you get from that are going to make sure that our liquidities and volume levels are so high that we won't have to deal with, big slippage. So, there's all these terms that you've mentioned, and you said, a soft default, which would be a soft rug. A default would be a rug, in DeFi. And now, like you have that spread. Slippage is basically kind of a spread that you deal with depending on how the ratios between the two coins you're trading are with. And the higher liquidity value you have, and the more locked liquidity that actually stays there, the less €1,000 or $1,000 transaction is going to affect the actual price that you see when you buy it. Low liquidity coins, or poo coins or whatever, are out there, and people go in and see these crazy cheap prices. So they go in and they drop 1,000 on, but then they really only get about $500 worth of the coin, and they don't understand why. They might have had their slippage set too high and all that sort of stuff, and it's because the liquidity isn't there. And the ratio is being dropped and drastically dropped by every buy and sell. So I think like just that Robinhood example that you're talking about taught so many people the value of what crypto is. And the chairman brought in so many people to crypto right after. I had friends who were on Robinhood calling me saying, "What's this coin all about? What's all this about?" I'm like, "Hey, slow down a minute. just understand what's happening here, and people now understand the value of one person and the value of one people altogether. There's no longer, the hedge fund can't just come in and make a decision now. If a bunch of people get together on Reddit and see an opportunity, we can now influence. It's not even influence markets. We're just deciding to make a move together, and there's nothing really illegal about that. It's not. It's legal, but with AMNs and what Meyer is going to do, it's going to be incredible just to see a nice free flowing market that never shuts off. You're talking about fractional reserve banking a while ago. You can compare that to staking. I think we're almost at 64% locked up. So if you look at it kind of that way as well, like there's 0% in banks, and we have 64% locked up, right? So like we're already way ahead of the game. So it's amazing.
Yeah, so it's the difference between having collateral, right? Real collateral that's like backed by something real, and then lending against it, right? So within crypto, a lot of the sort of value proposition is that the coins that are backed, or the tokens that are backed by real infrastructure or technology and or returns, are more valuable, because if we liken it, right, to the fiat money that you can just print endlessly, right? If you take an example like Dogecoin or something that has like an infinite amount of printing every day, I think they have over like 14,000 or 14,000 printed every minute and 14 million a day. You're just sort of, it's cool. And the reason the young generation is attracted is a unit cost basis, right? A unit cost basis is because how everyday consumers, we interact with prices. And so we look for the lowest price because that's how we think about things. But in investing, you have to think about it from a value standpoint. So the idea is to look at market cap only, and you want to look at that valuation. So what is the market cap? And you look at, if it's a very unit cost basis, it could be 0.000001, and the market cap could be $1 trillion, right? And so like ultimately you're paying or buying, even though that small fractional unit, you're paying for $1 trillion fractional unit. And so like ultimately it's an illusion, but we are very much illusion by this is one of the biggest mistakes most people make when they get into investing and so forth, is they're looking at this sort of fractional component and they think that, I can buy a ton so it's cheap, but that's not,
I have this conversation with every new person consistently, and I'm like, no, you got to look at market cap, look at the market cap, because that's all that matters. That's where your multiplier is. Then, that's not your multiplier, isn't in your unit, it's in your market cap.
Exactly. And then what is it tied to, right? So Dogecoin, it was like a fork of, I think, the Lightning Network or Bitcoin or whatever, but there was no developers working on it, right? So it's like if you buy something with nothing backed and nothing developing on it, I mean, it's, you can essentially buy or sell anything, but if there's value tied to it, then that means that it'll likely appreciate over time. Because that's how the value delivery is occurring. Whereas the only hope when you buy something that's not backed is that the next buyer comes in and buys it from you, right? And so we've had bubbles throughout all of history, the first bubble being tulips and so forth. So when people say, oh, well, it's going up, and the answer is yes, it's going up. But look, that game is a very difficult game to play, right? Meaning that you believe or know that you can time the market. And I've been in financial markets for 17 plus years, and I promise you, there is not a single person I've ever met, a mentor or anything like that, that can consistently time a market. And so this old adage of principles that are really timeless when it comes to wealth creation and investing in finance is essentially tied around this idea of valuation, tied around this principle of what we call patience and passive income. And so what liquidity pools provide us is the ability to have passive income. Where that income is coming from is sort of the spread, right? And then also for every time that they trade, right, they have to pay a certain transaction amount. I think it's 0.25% on the Meyer exchange, and then 0.5% goes towards, or 0.05% goes towards burning MEX tokens. And then you also receive liquidity mining, meaning you receive MEX rewards that then help incentivize more liquidity. And so as the system builds out, right, it's important to make sure that the liquidity is present. So with Elrond, they ensured this with the MEX token design. They made sure that only 10% was unlocked after 30 days, and then 90% was locked for a year. And then each month after that, it was unlocked, I believe, by 15% or something like that. And so this allows for a lack of dumping, right? Rug pulls, those words,
exactly.
those concepts that you hear on YouTube and so forth. And so this helps protect both the individual who's participating in the liquidity pools, but then also who's using the liquidity pool to exchange to a different token and so forth. And so all of these things, and the reason I know and trust Elrond is because everything they're doing is the translation of really fundamental, timeless principles of finance and investing, and both in the way they're designing things and they're looking at things. And that's why, like, their economics paper, everything, like, is what is necessary for successful blockchain.
Yeah, it's the positive feedback loop too, right? Like, and it's they create a positive feedback loop where every action creates a positive reaction that then continues throughout the entire ecosystem. It's like a ripple effect. It's the hyper growth, that we constantly see out there, and Myer's no different. They've also put in some anti-whale things with the MEX distribution. People with certain amounts don't get as much. Which is great. I'm really glad that you mentioned the vesting schedule. I think that's huge. It's something that's just going to make sure that we grow organically, and day one we don't have the investor rug. It wouldn't even be them who rugged it. And then then of course with Meyer there's the cheap fees. There's the ability to stake and provide liquidity for the passive incomes, and all that sort of stuff. And I think the most important thing is the scalability. The fact that the Meyer app itself is quite revolutionary in the way it works. And there's people out there day in, day out, there's all these hero tag stuff going on. I read, it's hard to keep up with, to be honest. But I read it and watch some of the videos, and some of them are here now out there who are part of it and watching now. And I think just like, what was it? Yes, we had 4,000 new people, 4,000 new Meyer app creations or something, like some crazy number. It's just growing and growing and growing, and like that hyper growth is just incredible. And like it's these talks, it's everyone out there right now who's watching and getting involved. Twitter is just getting more and more involved, Telegram, and it's being used, and with Meyer, the app itself, which is going to connect to the exchange, people are at just the click of a button going to be able to provide liquidity, run a transaction, see that passive income start coming in. They can choose to compound it into a MEX only pool. They can choose to do a stable coin pool. They can choose to then take some of the profits and put it back into staking, which is personally what I'll kind of do. My strategy is very multi-layered, but I'll be kind of using all the liquidity pools, but also putting money back into staking. I think the staking ecosystem in phase 3.5 that just happened was incredibly important for the network. I think what happened was, we were all ready for Meyer, and then we needed to push a phase 3.5 out in order to get that staking ecosystem top notch. And if you just look at it now, we had a new validator join today who's been around forever, another one yesterday. The options of staking is out there. Staking is going way up, and the staking ecosystem is looking stronger and stronger by the day. And now the team has had the ability to sit back and work tirelessly on the exchange itself. I've actually had a chance to see the exchange and interact with it a little bit, and I can say I'm super impressed. And they're taking all the feedback from some of us out there who've had the chance. The runtime guys are also helping, which is super cool to see. And so it's actually coming along really well, and the final product is going to be absolutely amazing. I can't wait to see it out in the public and being used and watching that volume rise. I don't know how long you've been around in Elrond, but I've been around for quite some time. Well, pretty well the beginning, and I've been there for every product launch, and every time I've been like, we'll have some time to fill this or whatever. I was always there at this very minute, but everyone else was too, and it oversubscribed almost every single time, and it was every time. So if we take that indication, what's going to happen with Mex, wouldn't be surprised to see a giant response on that as well. And just based on the number of Meyer users that are onboarding every single day, and these hero tag games and contests that are out there, it's mind blowing, to be honest. And you talked about Elrond and why you chose Elrond and how it's the perfect example of a financial system, and I actually completely agree with that. That's what got me here. But what I also noticed is that it's not built in a way where the big get rich and the small don't. Everyone can participate at the same level, and everyone has the same say in Elrond, and that's what makes it so powerful. It's not like the banks that just take the money to the big guys and the shareholders. Every Elrond, every e-gold holder, every MEX holder, every liquidity provider, every staker is a shareholder and benefits from it day in, day out. And so it's absolutely amazing.
It's a beautiful process. I mean, I think some of these concepts are new concepts, but a lot of them relate to the real world aspects. And so this idea like a bootstrapping, right? You often hear this terminology in some of the article and blogs. It's the same idea that like a hedge fund or even a new business would go and raise money. It just so happens that because of blockchain and crypto is that like all of us can participate in raising that money, right? So essentially the MEX token and so forth, anyone can go and buy that representation, right? It's the idea that eventually something will become economic. You're buying for sort of the future cash flows that will come through because of that business, or in this case, an exchange like the Meyer exchange. And so as more and more liquidity happens, more and more trades happen, right? More value is generated back to the MEX token holders, right? And so part of this equitable opportunity that you're speaking of is essential, right? Because essentially investing, most money is made in private equity. And so private equity, before something goes public, Uber is a good example. Most people don't realize that Lance Armstrong, actually majority of his wealth, the reason, even though all through the legislation, the legalities, the suing and everything because of what had happened with his career and his line and so forth, he was an early investor in Uber. Uber, he spent $100,000 in private equity back in 2010. And Uber is a network, right? So network is essentially part of the effects that Elrond and these other sort of blockchains are creating. That 100,000 is $3.2 billion, right? And Uber then went public, and of course, then everyone else could participate in it. But unfortunately, like most of the returns had already taken place, at least the life-changing ones. And so with crypto and blockchain, a lot of it is from the ground level up, right? And so it allows this equitable opportunity that everyone can participate. And most of the legislation and regulation around this is illogical, right? We allow someone to take out $100,000, $200,000, $300,000 of student loan debt before or at the age of 18. They don't even know what they're going to do with their life. But no, you can't invest in private equity or anything like that because it's too risky, right? Like it makes no logical sense, right? A lot of things don't. But what blockchain and crypto do is it allows for anyone around the world, right, to participate within the value creation of startups, essentially. And that's very, very powerful. And that's why some of the returns that you see in crypto are far exceeding anything within the equity market. And the reason, and that's why it's piquing a lot of the young people's interest and so forth. And the reason that is because of how it's designed and structured. You're basically able to get in on the ground floor of a lot of value propositions. You've got to pick the right ones, right? But that's the beauty of it, is that it levels the playing field in a significant way, and that is very powerful for the everyday individual. And one of the biggest reasons I'm an advocate, and I was looking for a blockchain project for reading all the white papers that actually understood the bigger picture of things, as well as the technology. And it just so happens that when Elrond had both, right? Look,
they have the trilemma. They have the trilemma. They got everything, and like it's
yeah, they have the technology and they have the economic side, and it's required for both, right? Like, and you've got to have a team that understands it at a very, very deep level, because, and I know that just because of my 70 plus years of research and participating and teaching and understanding, like what they're doing is fundamental to creating a sustainable infrastructure for the new financial system, right? And so I think that, what you'll end up seeing is sort of this hybrid of existing people building on the existing banks and institutions starting to build on the blockchain, different services and so forth. And so there, that bridge or that gap is going to happen as regulatory clarity continues, and those bigger participants can actually do so. And when that happens is hard or difficult to judge. But the whole reason I got interested in the space, and I've avoided it for a long time, was I read interpretive letters by the OCC, which is one of the main regulators. I used to bring in the FDIC, the Federal Reserve, the OCC into my courses and have those guest speakers. And I built really strong relationship with those regulators, so I understand how they think. And so the OCC had stated that they were going to start to allow for banks, existing banks, to custody stablecoins. And they also chartered the first crypto bank, Anchorage Bank, in the United States. And so I knew that this pivot point was coming. And then I obviously saw the market opportunity in terms of what blockchain and distributed ledger technology could disrupt in terms of an $867 trillion market opportunity by the World Economic Forum. And so it's not a matter of if, it's just when at this point. And so, I think the biggest thing is obviously to have patience, but to understand that what we're holding is quite valuable. And it's not that the bigger players don't want to participate. It's just that their hands are tied behind their back right now. And so the narratives that are based on a business model of the media, which are sensationally based, they're going to drive negative headlines because mentally and psychologically we're wired for survival. We're wired for
well, it's just news cycle. It's just it's psychology. It has nothing, and the real big downfall of media is it's all about the clicks behind the bricks, right? Those clicks make them money, and if there's something going on that that seems like that they can write a headline that some of the headlines you actually read, which is crazy. You'll read them and it'll say something negative about crypto, but then you actually go into it and it's actually a positive piece. Right, and it's actually just
but you don't get clicks.
Yeah, exactly, and it's just, and then when sentiment changes, then everyone's saying, oh, crypto's great, crypto's this, crypto's that, and so the media is actually probably the thing that plays the most against us, and it's more based around, again, just the system that, which I think we can agree is broken, is if the news outlets of the world don't get those visitors to their websites, they're not making money. And if they're not making money, then they don't exist, and people's pockets need to be lined. And there's people who work in jobs for those companies, and they need to get paid. But it's unfortunate, but that's just the human nature and psychology in itself. That's been the way it's been forever. The tulips. It goes back decades. Centuries even, right? So I'm just going to move us forward into the question aspect of things. Before we go there, I just want to say I think you're extremely well spoken, and a lot of the info you've given here is absolutely phenomenal. We're so happy as a community to have you on board and out there bridging that gap from traditional finance to DeFi. It's great your posts that you're putting out about bringing people in. That story about the OCC you just told was actually really interesting. I assume that's Wyoming. Is that the Wyoming bank? Anyways, but.
So no, that's even separate from that. But right. I don't believe Anchorage is in Wyoming.
Oh, it's Alaska, maybe?
I could be wrong. It might be. But Wyoming is the leading state with regards to creating legislation and regulatory oversight for crypto. So they've been the most progressive. Florida, secondarily, right, with Mayor Suarez, and obviously even Elrond has created a relationship and connection there. And so I part of this is sort of the game of politics that are in bed with business and conflict of interest, but it's essentially the people can demand it, right? And so if the people move continually in the direction of demanding what should be inalienable rights, then the system will have to design around it and regulate around it. And so for the first time, we have a say, and we can per se vote with our dollar that we want transparency, right? That we don't want opaqueness. We don't want essentially 1% to have all of the leverage to play the game and set all the rules. And we don't even know what those rules are because they can change them on a whim. And so this is a very higher integrity system. Significantly, there's a night and day difference with respect to that. And just to, answer back, I reciprocate my also appreciation and gratitude towards you, Kevin, and obviously the entire Elrond network team and everyone who's collaborated. I've come in, later down the road, but I wouldn't be doing this if I didn't align with what they were doing. I left the industry and didn't want to participate. I was recruited to work on Wall Street predominantly because of what I knew. And so I couldn't align my integrity with what was going on. And I'm very deeply passionate and purposeful because of some of the life paths that I've had. And so I wanted to, contribute in a way. And so, Elrond Network and Celsius Network and things like that have given me an opportunity to teach and use sound fundamental principles that are timeless in a system that is more fair and equitable and allows all participants to, have the same sort of, value proposition. And that's, beautiful. So it's a likewise reciprocation. I appreciate the kind words and so forth. And, I'm doing it because, it's not because of anything, but wanting to help create and build this into the world because it's what is necessary. And I honestly wasn't too confident that anyone could disrupt the financial industry as a whole until I started to understand blockchain and crypto at its core. And now I'm very, very confident. It's just a matter of if, not when. Matter of when, not if. And so, it's a great time to be alive. A lot of this, I guess, is very fascinating in the fact that we talk about network effects in terms of valuation, but the internet came before blockchain and crypto. So I anticipate the trajectory of adoption to be much faster and higher and steeper. We're already seeing this. It's about, I think, 30% or so higher adoption in terms of relatively to the internet. And I expect that to accelerate on an exponential curve. And that's simply just due to the fact that, if you liken the fact that our nervous system transmits signals for me to speak, you to talk, and so forth, the nervous system is like the internet that connects us all, right? But the blockchain and crypto is like the medium for value exchange that was never created before the internet was created. And so all the value has gone towards Google, Microsoft, Amazon, all the big tech giants that are centralized. And they're the ones who profit off of this digital value proposition because we don't have the infrastructure to own any of it and also our data. But now that is different. And blockchain and crypto presents that change, right? And because the nervous system of the world has already been created, like the internet, right? The transmission of this, as it accelerates, will be something that none of us can sort of calculate mathematically.
No, we can't. We can't at all. It's just not going to happen. Adoption. They just talk the super cycles and all that stuff, and adoption. No one knows what's going to come. I mean, we don't have a crystal ball, but I agree with you that once it hits and true retailers and people start coming in, it's going to be this insane growth that we might not even see. You're going to see chains not quite making it because they can't handle that volume. But what we do know is about Elrond is it's been built to handle volume first. It's built to be scalable. I think your sound has just cut off.
Can you hear me now?
Yeah, all good. Yeah. Anyways, so just to get into questions, the first question, is there anything that you're planning to build with Elrond? I know you're working on kind of an educational portal. I noticed a while ago you have some articles and an education thing going on. Is there anything that other than education or whatever do you plan to contribute building or that sort of stuff or contributing maybe regulatory type stuff?
Yeah, I plan to continue to provide high educational content in terms of both writing, video content, and so forth in terms of financial literacy. And so for the Elrond community, also plan on doing some of that for the Celsius network community as well. With regards to building on top, my identical twin brother I had mentioned earlier, he's a software engineer, and there may be some integration with building on the Elrond network itself and developing a model that would allow for integration of, say, an educational series on top of that. But that's probably a little ways down the road. As of now, I just plan on continually providing content. Again, most of my life, I really sort of align with the fact that I have to commit to something that I feel very aligned with on an integrity standpoint, and that's fortunately, these particular Elrond network and Intelligent network, I align quite substantially with based on all the principles that they've laid out, and I'm just thankful to be a part of the community and all the value proposition that everyone has already provided. Many people like yourself are providing tremendous value.
Yeah, and I think education is just as important, and in order for us to grow, we need education, right? And you're telling me earlier that you actually you teach, or you have taught in the past at the University of New Mexico, and so I think that alone, and having eventually you teaching classes in blockchain and just in DeFi and education in itself is how we're going to get to adoption. I saw someone there earlier saying that you have a way of taking the most complicated things and making them simple. It was someone in the chat, I read it, and I completely agree. I think a lot of people here appreciate that for sure. We had another question just about market caps. So what factors are considered when launching a new coin like MEX for market cap? So let's just make that a bit more general. Like what's considered, what needs to be considered when a new coin or a new stock gets listed in terms of what it gets listed at for its market cap?
Yeah, absolutely. It's a great question. It really comes down to supply and demand, right? So prices get set on a short-term basis by supply and demand. And so like you can see wide fluctuations in prices sometimes that aren't really representative of the value, right? There's a difference. Price and value are two different things, right? And so with the launch of, say, any type of token, it depends on the overall amount of demand that's out there that determines where that price is going to get set. So there's tremendous level of demand for the MEX token. The price is going to be set higher. And it's then also determined based on the level of supply, right? And so the supply of the MEX token, a lot of it will be locked up, even though there is a larger supply. And so, as to where it, it's arbitrary in the fact that no one exactly knows the exact amount, not even Elrond network team, but you'll get an idea when it launches, right, based on supply and demand. If there's tremendous demand, then the price is going to set much higher. And if there's not as much demand, then the price will get set lower. And then the other factor is just what's the overall supply. And so those hopefully answer the question.
Yeah, and on just to chime in on the locked coins, it's important to note that you can actually stake your locked coins into the liquidity pools, which is quite revolutionary. So while they get vested to you, you can still leverage them and put them into the liquidity pool, which is great. Which means you're getting them vested to you. You can't sell them, but you can still leverage them in the liquidity pool and provide liquidity. And I think that's groundbreaking. That concept alone is what sets Elrond apart from other AMNs. I think the thing that most people also don't realize is most of the current DeFi trading platforms you use out there are all layer 2, and they're pretty well built on Ethereum, and like there's a few others, but what people don't realize is Elrond's a layer 1, right? And so there's a very unique advantage to being a layer 1 DeFi AMN, because you have control of that scalability. You're not a layer 2 is always still going to be dependent on the layer 1, and so there's a lot happening there that is going to set it apart. The locked coins leverage is one of the other ones, and the other one that I always like to touch on is that it's layer 1, and like there hasn't been another layer 1 exchange that people use out there for a while, and so it's super exciting to see that for sure.
Yeah, I think just to add on that point is just think about it from the friction, right, of layer 2, right? You have to, in order to participate in layer 2, you have to first buy the layer 1, bridge to layer 2, right? So that requires tremendous amount of complexity and steps involved and time. Whereas with Elrond, right, you let's say you onboard through the Meyer app, and immediately you can participate without bridging, without doing. So you basically remove all those additional steps, and that value proposition is significant, right? Like if you or I were going to tell a friend how to get in crypto, right? We're not going to tell them the one with 20 steps, right? Or this complexity over here, and this, it's just too difficult, right? And we're worried, obviously, if it's our friend or someone else, that they're going to do something that maybe will make them lose the money, right? If you happen to send layer 2 to layer 1, or layer, without bridging, then guess what happens, right? You no longer have access to those coins unless it's supported on layer 2 as well. And so that's where all this complexity is still there. And to touch on the point earlier in terms of the collateral point, it's a significant value proposition, but to sort of relate it to the real world is, people can take out home equity loans, right, against their home, right? And so this idea of being able to use the MEX token while it's still locked up is no different than saying like the lack of value of your home, that you get to utilize the utility of everyday different things, right? And then you're basically able to participate and generate more income and or use it as a way of borrowing against liquidity, like a home equity loan, right? Where we borrow against our home, we have equity in it, we can utilize that amount. And so this, absolutely, all of these things are very like in sort of traditional system, but different terminology and different words, and the flexibility and the options are endless. And so it's super exciting.
Yep. So we have another one. We have a few more questions coming in. This is great, guys. It's a great conversation. So the next one is, any idea how MEX is backed? Let me just go up a second. Can you anticipate the value of the Meyer exchange liquidity pool? I'll kind of just answer that real quick. The value of a liquidity pool is dependent on the pairings. So, for example, eGold and MEX will be a liquidity pool, and the ratio between that will create a value per liquidity LP token. So, if the MEX token were to go up and eGold were to go up, then that LP is going to increase, and there's things like impermanent loss. So it's hard for us to really speculate on what an LP token is going to cost or how much it's going to be. But what I can tell you is the more that gets put into an LP, and the more the more liquidity that gets provided, the higher that value is going to be. There's a term called TVL, total value locked, and it's a big number out there, and the faster we get our total value locked up with the exchange, the higher value you're going to see in those LPs and LP tokens. So it's tough to speculate, but I can tell you that as long as we grow that total value locked TVL number as fast as possible, and then because of that locked mechanism that is in the protocol, where you can actually lock your liquidity for 2 years to earn back double rewards, I believe, is also going to ensure that liquidity stays there and our TVL stays high. So the value is going to be quite good, assuming people use it, which I'm more than confident that they will. So any idea how MEX is backed at the start, investor round? So I think we already know the answer to that. It's being vested. We've talked about that. It's being vested.
Yeah, and it's backed by the it's backed by the Meyer exchange, right? The functionality. I mean, you're essentially investing in like a brand new business, right? Like something that's not gotten off the ground, right? This bootstrapping idea is like the investors, they pool all their money together, and there is no future cash flows coming in right now. You're basically paying for it down the road. With technology in the Meyer exchange is that the path towards actual value and future cash flows, meaning the percent after every trade is executed, and is where the value proposition starts to tie to the Meyer exchange, and then the functionality, right? So all of the technological sides of the Meyer exchange are extremely valuable. If it's the best exchange that's existing, right? And if you take the Uniswap or you take any of these other exchanges, right? That's the market sort of somewhat it's competing against. And so it's backed by the functionalities, which we've described in endless detail, and then the fees that come from it. And those are the future fees. The more liquidity it comes in and locks their money in, the more that it's going to generate in terms of fees. Because every time a trade happens, right, that value is then distributed to the people in the liquidity pool, you or I. So yeah, hopefully that clarifies that component.
For sure. And then we have another question here just asking if that locked liquidity is going to be specific to other releases or any of that stuff, or if it's MEX specific. Right now, I haven't seen it. I haven't seen a locked liquidity. I haven't seen anywhere where you can take a locked coin and leverage that locked coin before it's vested to you. I've never seen that. And I think they're just asking, is just this MEX specific? Well, I don't think it's going to be after this. I think you're going to see other people take this approach, because one of the biggest issues out there is liquidity pool hopping, right? If you actually look at the money, and if I had the time and spent all my day just looking at liquidities in different exchanges, you'd actually be able to watch the money move from exchange to where higher APRs are being applied. And you just have farmers who just go in, raid the crop, and then they move, and then an exchange that, you know, did have 1 billion TVL or half a billion TVL, all of a sudden goes down to 100 million, and then it just moves on to the next meme token or the next food, you know, like, and so I think you're going to see a lot of projects after this say, well, we don't want our liquidity to leave, we don't want TVL, like we can't afford that the system won't work necessarily, right? And so I think this mechanism alone is incredible, and yeah, I think other people are gonna catch on to that afterwards. But as usual, Elrond's always got first mover advantage on this sort of stuff, and they've always been just ahead of the game, the forefront of technology. So yeah, I think we're really lucky to have that mechanism on our exchange. We have a question there. How early are we? I would say early still. I wouldn't say dinosaurs, but, you know, maybe Neanderthals.
So I would say, yeah, I would say that we are in the best position. People coming in right now are in the best position, right? And the reason that is because, like, this disruptive technology, you know, takes a long time, right? Bitcoin's been around after sort of the financial crisis. It was sort of created as part of that mechanism to checkmate the monetary insanity that was occurring. And so a lot has been, you know, tested and tried. And so, like, only 2.8% of the world's population own cryptocurrency. So, like, to give you an idea, right, like, I mean, that's, and most of the large players, right, are not in the space, right? And it's because of the insight that I described earlier, right, the regulatory prevention and so forth. Like, so to say that you're early, you're really early, and you're at a point in time where I think things are going to take off because the utility is now here, right? And Elrond's going to be like this first, where that utility is like for everyone, because it's no longer these high gas fees where the everyday person who are predominantly in the crypto space can then participate. So it really is going to change the game in a significant way.
Yeah, cool. So we have another question here. I think so. We have any idea for a good DApp for the decentral app for the ecosystem? I'm going to change that question just slightly. Do you have any ideas that would be good for the financial traditional finance for the ecosystem, like a decentralized app? We already have Elrond Talks out there that was made by Trust Staking, and you can go in there and kind of get all your data based on your wallets, which is really good. But do you think there's other kind of decentralized apps that would be good for the ecosystem that would help traditional finance understand a bit better?
Yeah, I mean, I definitely think, like, obviously building out, you know, the things that are already necessary within the traditional world, like those tax elements, are exactly how you sort of start to bridge the value onto the blockchain itself and crypto and people participating. Because when they do, then they recognize the speed at which things can occur. And, you know, obviously there is a function of time is money. That's why, you know, Elrond created this whole video, take back your time, right? And this is that idea that, you know, if we don't have the ability to have our money work for ourselves, then, you know, we're basically paying everyone else, and we're never able to, you know, do the things we want to do. And so to circle back around with the question, I think there's, you know, a myriad of different things that can be built out. But, you know, dealing with, you know, accounting, dealing with all sorts of communication mechanisms, and also mechanisms that will allow people to utilize the same things they utilize every single day on the blockchain, right? And so I think the examples are too vast to really go down that wormhole. I'll have to, you know, think what would be the best before recircling around to this question.
For sure. Well, you'll have to make a video on that maybe at some point. Okay, so we have another question. How big do we think Elrond's going to become? I'm just going to say that's up to us. However big we want to make it, we can make it as big or as small as we want. So as long as we're out there educating and telling people more about it, staking more, interacting with liquidity pools, and the MPAD and all that sort of stuff, then the sky's the limit. And if anyone's read the financial papers out there and the stock to flow model that Elrond's created, you'll see that the hyper growth and the actual avalanche of growth is there. It's just more and more education, onboarding more people, and we're seeing that every single day. And so yeah, it's just however big we want it to become. And I challenge anyone out there who's watching, who hasn't, who might have some kind of value to add, but hasn't quite yet. Just jump on, join the community, start jumping in the conversations, because that's how it starts. I was a little shy at first, and I think it's normal, it's okay. But trust me, if you have good stuff to say and you're championing Elrond, go out and say it, because every single person out there is what matters, and it's that one person at a time mentality. That 1%, we improve ourselves by 1%, and then we compound that 1%, and then eventually we'll be at a point of world domination or something. But I don't think that would be in the actual ethos of Elrond for world domination. Let's call it more the people's world domination or something, or the people's world or something, right?
Absolutely.
Yeah. Okay. So I think most of our questions have been answered. I'll just touch on the last one here, and that's just like when MEX. I think there's a lot of work going on in the background with Elrond, and it's overshadowed by this when MEX meme that's out there almost every day, and people. So I just want to touch on a few things that have been happening, kind of as a roundup, and then we'll part ways. But yeah. So apart from all the good work that's going on with MEX, we have tons of protocol progress. We have phase 3.5 went live, and it's yielding great results. We have more and more providers coming on every day. People who were already validating with us, who decided to switch over to staking pools to allow other users in. Our amount of staking coins locked is going up every day. It's amazing to see. We also have improvements. Today there's been a bunch of testnet and devnet upgrades the past 2 days, and there's improvements there for ESDT tokens to be used on the MyR app. We have bridges that are almost ready to bridge over from Ethereum and various other things. So those are being worked on. Bridges are super important. Bridges are basically what's going to bridge the gap of everything. The chain link integration is coming, so that's huge too. Don't forget, we just had BTC that went live into the MyR app. That's absolutely amazing. The fact that we now have Bitcoin in there. I know Elrond's supposed to be the Bitcoin killer or the Ethereum killer, but it's still important that those core coins are still part of our lives, and having it in MyR is extremely awesome. We've increased to other languages. There's Vietnamese that was just there a while back, I believe. There's tons of more hooks going out into other countries. There's the growth campaigns. There's people like US coming on doing more and more stuff. There's the hypergrowth, the new partnerships. There's stuff that's live and not will be live. So there's actually partnerships with people who are now using the chain, which is absolutely incredible. So what we're seeing is a lot more behind the scenes, and I just want to make sure that people understand that yeah, MyR Exchange is a really big piece, but there's so much more going on, and the team are working tirelessly to improve every aspect of the business, and they're not sitting back and neglecting other stuff, because they shouldn't. Would have been awesome if we had MyR out tomorrow. Obviously that'd be incredible, but would I want it put out with not the right checks and balances put in, like some other people do? No, absolutely not. And did we have to do phase 3.5 first? Absolutely. the staking ecosystem is so incredibly important to the security and longevity that if we were to have neglected that, then we would have been in vain going into Myra without looking at that. So it's one step at a time, and it's super important that we went down this route. So moving forward, later this month we'll have another Elrond Talks, and we're going to just discuss what happens at Epoch 366, which is after 1 year. The rewards reduce and all that sort of stuff. I'm not going to talk about much more than that, but we will get another Elrond Talks out there about that. And yeah, stay tuned for more educational pieces coming out from, you know, all the different validators, all the different people out there, and all that stuff. So finally, I just like to thank you again, Wes, for coming on. You do make things a lot more simple and explain concepts in a way that people can understand. And I can talk for everybody again in the community. I know I said it a few times now, but we're extremely happy to have you. We're looking forward to seeing your face more often, and just hearing what you have to say. I feel like you could just go live for an hour by yourself, and people would watch it because of the wealth of information that's behind those eyes. And thank you so much for being with us.
Absolutely. It's mutually reciprocated back to you and the rest of the team and the Elrond community. I feel very grateful for that opportunity, and I will continue to provide that educational content that I know so much of the world really needs more. Financial literacy is something that is a deep passion of mine, because I understand how limited access to this information in an accessible way and an understandable way. And yeah, look forward to continuing to share that information and provide value, and just really thankful for all of the endless hard work that's gone into creating Elrond, because you know, I only could have envisioned that this was a possibility, and I now that to see it into fruition, it's a beautiful thing.
Yeah, for you it must be something quite poetic even, right? You know, 17
Absolutely.
years of education and learning and research to see something that you didn't necessarily think was possible to now becoming possible. I think that's amazing, that's happening for you, and that you're actually actively part of it. Okay, so I'm just gonna end there. Thank you again. Again, apologies for the bit of a sound disruption at the beginning, guys. But I think, you know, in the end that doesn't really matter, because we had a great conversation, and yeah, so that's it. So I'm going to say bye to everybody. Everyone, enjoy the rest of your day, and we'll see you on the next one. Okay, stream is ended.